VC is a game. People should, first of all, know that this is a game, and then they should understand what the rules are, and then they should play. My name is Miko Matsumura. I'm a managing partner with Gumi Crypto's Capital. We're a early stage blockchain fund. So we just look for best entrepreneurs, builder-centric, and early stage. If you go all the way back in the time machine, I did get a bachelor's in psychology, and then I did a graduate program in neuroscience. And interestingly enough, this was 1990, which was a few years after the seminal publication of the Rumelhart and Hinton backpropagation paper. And so I was actually working on abstract computational neural networks. Interestingly enough, I was working on very primitive versions of what today has become the large language model. So effectively, the thing that has been amazing for me is the first model that I built was a 33 parameter model, not 33 billion, not 33, literally 33 parameters. And at the moment, like, these types of models are the dominant form of life, that people are confused in the sense that they're calling that AI, right? So they're saying LLM equals AI, right? Now, it's probably the most surprising form of AI, but there's obviously many other forms of AI. And but part of the confusion is people say things like, AI can't be creative, right? And AI can't come up with new solutions to problems, right? That's actually just false, and it's kind of an absurd thing to say. Like, I think the reality is that today's LLMs are not able to do that because they're statistical and effectively interpolative. But really, there's no question that tomorrow we're going to have, and even if you look at other mechanisms like evolutionary algorithms, you're going to see, really big advancements. And, to me, one of the really interesting paradigms is what I refer to as not artificial intelligence, but artificial stupidity, which is, if you can have a massively parallel stupidity, you can actually create incredibly novel solutions, right? So, if you can send in simulation a swarm of attackers, right, then you can have trillions of, basically stupid agents that are all bumping into things, right? And their random behavior may actually result in some emergent, even zero-day vector, right? So the thing that's really interesting is that that type of a construct can actually be creative. As long as you have a evolutionary fitness function that screens for a success factor, right? And then you have some kind of reinforcement learning paradigm where it's rewarded for, doing something, right? Then it can absolutely be creative. So, so I think people now, it's entertaining because, Llama 3.1 just released their 405 billion parameter model. It's rumored that ChatGPT is a maybe 1.7 trillion-ish parameter model. So these are very large models, and the amount of compute is pretty massive. But, it's exciting. It's exciting where we've come. I'm actually very surprised to be involved in Web3 instead of AI, but Peter Thiel was recently interviewed on Joe Rogan, and he said that basically crypto is libertarian and AI is communist, right? Now, I tend to disagree with Peter Thiel on many things, but I think that really, to me, I would frame it more that AI tends towards centralization and centralized power, right? Whereas crypto tends towards decentralized power, right? And I think that we really hit an era that I refer to as peak centralization, right? And we've reached the limits of scaling using centralization. And I think that a lot of people who are decentralization maxis are really overemphasizing the power of decentralization. And it turns out that centralization's amazing. It's just that, like all things amazing, it also has limits, right? So I think we reached the limits of centralized power. In terms of myself, I definitely think of myself as sort of a reluctant cryptographer, and I stumbled into it through open source software. So I'm very interested in open source and open source innovation as sort of the platform for human advancement in software. I definitely feel like, obviously psychology has to, really kind of cleave towards becoming more of a natural science, right? Obviously, the history of psychology is one that kind of is more fuzzy, right? Obviously, you go back into the greats of psychology and the inventors, and you go back to, Freud and Jung and these types of characters, right? But as you get into the neuroscience aspect, you start to really understand how to model things like cognition, and how to really understand really behavior, and how to understand ultimately, like, psychology is the science of behavior, and behavior is complex, right? So the thing that's really interesting becomes, how do you model behavior and how do you understand behavior? And it turns out, for example, that today's language models are capable of modeling quite a lot of pretty sophisticated behavior. And, as we get to what OpenAI thinks of as the second stage of 5, we actually get reasoning machines, which actually have the ability to advance in a more goal-directed fashion, which I think is super interesting. So, that means that it's capable of rational decision-making, right? Which I think is a really, really interesting level of interactivity. It's probably one of the most exciting fields, right? Because when you really look for complexity, there's really nothing more complex than these sort of 300 cubic centimeters inside of your skull. Like, that's the zone of highest complexity, like a trillion brain cells, and when you kind of get to the dendritic level, the number of combinatoric parameters, it's way, way, way beyond, right? So I think that people are talking about abstract neurons as if they're neurons, and it's not even close. It's just that when you reduce problem sets to things like manipulating symbolic logic, those are just easier problems. So, I think that today's large models, people talk about the number of parameters and they use the word neurons, right? But the reality is that the human brain is, insanely many orders of magnitude more complex. If you look at some of the academic research, right, ever since Rumelhart and Hinton's backpropagation, there's obviously been some more advancements. For example, things like PCN, which kind of enable you to do a much more biomimicry in terms of how error is distributed across hidden layers, right? So that's a super interesting result. It allows for things like more asynchronous learning, which is probably much closer to what's happening in the brain, and it's also more efficient, right? So I think these are definitely sources of inspiration, but I do think that these are all really metaphorical and kind of sources of design inspiration. But in a sense, I think, these are fundamentally different substrates. And I think in some ways, what we've done is not intelligence per se, but that we've commoditized attention and things like patience and persistence, which I think is really very interesting.
Did you always have the personality of an entrepreneur, or is that something you acquired over time?
Well, I think in a way, there's always this choice. I got my start in Silicon Valley at Sun Microsystems. And in a way, during the dot-com boom, there's sort of this really expansive growth opportunity, even within a large company. But I think as the dot-com boom started to cool off, right, it's big companies become at some level inefficient, and you start to see a desire to, really try to discover if you can do things in a better way, right? Because obviously when you go into a big company, there are huge inefficiencies. and of course that produces some amount of irritation or frustration. So I think an entrepreneur in general is someone who sort of has that kind of attitude, which is of course that an entrepreneur can do it better themselves, right? So in a sense, having experienced the growthful large company, I definitely wanted to try, doing direct innovation. And, to me, I think that that's the majority of my career here in Silicon Valley, which is I've been about 25 years in entrepreneurship. And, recently since 2018, really only like 5 or 6 years on the venture capital side. So, I definitely identify with builders and entrepreneurs.
What are some of these inefficiencies that you were seeing at these big companies?
Yeah, so I think we're headed towards a period of extreme efficiency. But I think that the thing that is extremely inefficient at large companies is effectively, you could probably model it as deceit, and you could model it as sort of collusion. Deceit and collusion are probably the two biggest factors, right? So in a sense, there are people who are effective, right? And then there are people who are deceitful. But when you have kind of a natural environment that's governed by things like internal politics, then people who are deceitful and colluding can actually form networks where they support one another, right? So it's people who are less effective can actually appear to be more effective using manipulation, right? So this is something, that's just politics, right? So, the thing that I think is really interesting about an application of AI is that, increasingly AI will be used to evaluate people's job performance. And obviously that will make it potentially even more Darwinian. But the good news about AI is that at least it will be fair, right? So fair in the sense that it can be programmed to be fair. It can also be programmed to be unfair. But I think that, people who want best economic output will probably want it to be programmed to be fair, right? So in a sense, like the idea, because at the moment right now what's happening is managers and upper managers are judging other managers. And, so it just becomes this game of like, who's trusting who, right? And obviously that's extremely inefficient, right? So to me, I think we are going to enter an era where the machines will really more be in charge of evaluation, and, they'll use much more objective criteria. To me, one of the things that's really worth challenging is experience. I think experience is worth challenging because I think the game will be written anew. I think the AI era will transform a lot of what's important. I do think that when you do talk about things like company culture, I think culture itself will continue to be pretty important. I think that culture is part of, effectively culture is connected to brand, and culture and brand are both effectively monopolies, right? Which is that, every company's culture is unique, and that means it's a monopolist of that culture, and it's a monopolist of its own brand, right? So these are really interesting because it creates competitive differentiation. It's very interesting, right? I think these days in Web3, people are very interested in this concept of vibes, right? And so obviously vibes are an emergent property of brand and culture. So the really simple thing was we were part of the first generation of cryptocurrency exchanges. Part of our philosophy was to be more on the regulated side. So we definitely were a FinCEN registered MSB or money services business. We registered for money transmission licenses on a state-by-state basis. So, we definitely went with the very strong regulated orthodoxy, right? But on the flip side, we were focused on being fully self-custodial, right? So we were in this, if you were to map out the exchange world into quadrants, right? The dimensions would be self-custody versus basically custodial, non-custodial, right? And then the other axis, you could say regulated, non-regulated, right? So the square that we bet on is the square of non-custodial, which is self-custody, and regulated, right? So that was what we bet on, which is really the maximum of effectively being legally compliant, but also being essentially maximally self-sovereign. So that was the kind of quadrant that we bet the company on. Now, it's really fascinating how these dynamics work, because ultimately this really has to do with the idea of maze, right? Which is that you kind of place your bets on a future, and then you have to kind of look at the consequences. So it turned out that the regulators were much slower to react to the industry than we expected. So really the quadrants that did the best were centralized and regulated, and decentralized and unregulated, right? So basically the technology of decentralization was used effectively for regulatory evasion, right? And the regulators were not successfully able to pursue those organizations, right? And then the centralized and regulated bucket were basically able to give things like performance, and they were able to build their brands quickly. So, I think our hypothesis of how the market would segment was, wasn't correct. So I think that was sort of what happened in terms of this project. The point that I would make is that pivoting is very expensive, because really the point of a project is that there's a mission, and the mission has conviction. So in a sense, like if you're going for something, you should definitely go for it. And if you're wrong, then you could pivot, but really if you pivot, it's really a new thing. And you have to establish conviction for that, right? So I feel like in a way, we just looked at a contrarian future scenario, and it really wasn't the logical box to be in. During that part in my career, I was recruited to work in venture capital. So I did negotiate an overlap period where I was still doing startup, but at the same time investing. I actually don't recommend it. I think it's too difficult to do, so it's probably better to do like a clean break. But, I think that was my transition into the VC side. And it was really exciting and interesting for me because, I'd been on the entrepreneurship side for many, many pre-crypto startups as well as crypto startups, and then this particular one. And then, having really raised a ton of VC myself as a startup person, I really got interested in, how the other side thinks, And right now, that's one of my biggest passions is that VCs have their own culture, and it's pretty mysterious to entrepreneurs, right? So entrepreneurs are often wondering why VCs behave as they do. And, having seen both sides, I do see that there's a really deep and fundamental cultural gap. And I think that there's huge misunderstandings between these two groups. So I'm very interested in and passionate in kind of trying to explain why VCs behave the way they do, because there are reasons.
Would you mind touching on one or two examples of?
Yeah. Here's an example, right? Which is, ghosting. So VCs are super famous for ghosting, right? Mm-hmm. So basically you're talking to a VC and then they just stop responding, right? So why do they do that? So, in a sense, like it's rude, right? So it's sort of, wow, that's, so it's very irritating, right? And entrepreneurs are often very frustrated that this happens, right? But it turns out that entrepreneurs as a class are uniquely persistent. They really see any negative signal as an objection that they have to overcome, right? And then they're very dogmatic about their beliefs, right? And so the reward for engaging in an entrepreneur that you don't want to invest in is actually the total benefit is potentially very negative. And there's very few scenarios where a VC gets any benefit at all, and it usually is a big minus. And I'll give you examples, right? Which is, if you go to, so there are rare occasions where you trust an entrepreneur with feedback, right? So there's rare occasions where an entrepreneur will be like, no, tell me what you really think, and I will take it, like an adult, right? And if you're like, okay, I believe what you're telling me is true. There are rare occasions when you can give that person feedback and they'll be like, thank you very much, that's super helpful. Almost never happens. It almost never happens. So what usually happens is that you tell an entrepreneur something about their business that you think is a concern, right? And the bottom line is that VCs aren't correct, right? They just have their own views. They have their own opinions, right? So they have their opinion, right? And, so the fact of the matter is that entrepreneurs generally know a lot more than VCs, right? A lot more, especially about their particular vertical segment, right? So like most of the time VC opinions are actually not that well informed or that good of opinions, right? So if a VC gives their not that well informed opinion about why the company isn't interesting to invest in, right? Then there's two common reactions. One common reaction is that the entrepreneur just latches on and just keeps talking, and keeps trying to overcome the objection, right? Which is using time, right? So in a sense, the thing that's crazy is that a VC is someone who has overabundance of money and an underabundance of time. So time spent engaging with an entrepreneur that you've already decided you won't invest in is basically, if you do that, you will kill your fund. Like you have to focus, otherwise, if you're spending time fruitlessly, you will underperform your cohort. Like all other VCs will outperform you. So in a sense, like if a VC is giving feedback, it's expensive to them, right? And obviously, like endlessly engaging in, objection overcoming is actually pretty bad. Like it's expensive for the VC. But the other reaction that's potentially even worse is that the entrepreneur will decide that the VC is an idiot, which is a common reaction and many times correct, right? But from the brand damage perspective, it's really bad. It's bad, right? Because that person now goes around the industry saying, yeah, they don't get it. Like that's a stupid firm. Like that guy's in particular is very stupid, right? And so in a way, it's much better to say nothing. Like it's much better just to disappear, right? Because, like the Homer Simpson going back into the bush, right? Like it's much better to, because then the person won't either, waste your time trying to overcome your objections, nor will they kind of walk around the industry saying what a stupid idiot you are, right? So like, neither of those outcomes are particularly terrific, So I guess what I'm trying to explain is that, and this is something that I think is hard for people, which is that almost all things in life, so there's two kinds of things in life. One which potentially can cause harm, right? So for example, driving a car, right? So anything where you can potentially cause like material harm to another person is not a game, right? So driving a car is not a game because you can hit someone and that's very bad, right? So that's not a game. But all other scenarios where you can't cause material harm to people, it's a game. Those are all games. So VC is a game, right? Now, it's a professional game, right? So like, for example, NFL football is a game, right? And it's a professional game, very serious game. And people get very serious about it. And, if you're in a Super Bowl halftime locker room, your team's down by 17 points, coaches can have things to say, right? So it's a serious game, but it's a game, right? I think the reason why I'm emphasizing this is that people should, first of all, know that this is a game. And then they should understand what the rules are. And then they should play, right? I think that one of the weird things that happens is a lot of entrepreneurs kind of want to fully deconstruct this and be like, they just approach a VC and they're like, I don't have slides. Like, I just want to talk. Like, let's be friends, this kind of thing. And, I already have like too many friends that I'm not able to spend enough time with. So like, I'm not out looking for new friends. Like we're trying to conduct ourselves professionally. So like, so that's another potential misunderstanding. There's definitely a lot of coaching. And one of the biggest things I would advise is if you do get advice on how to approach VCs, don't take the advice from any non-sitting partner advisor. Like people who advise you on how to talk to VCs that themselves are not VCs are not going to send you well. And oftentimes, like, if an entrepreneur does something really strange, I'll often ask them, like, who told you to do that? And they'll often say, oh, it's such and such advisor, and it's often someone who just doesn't know. So, I think if you are going to get advice, get it from a sitting partner at a venture firm. That advice will be more pragmatic and more realistic, because VCs are under very weird and unique pressures, especially now, by the way, because when you look at yield internal rate of return compression in VC funds, over the past vintage. Like, the pressure is very real. So like, these individuals are not generally are not and should not be too relaxed. VCs tend to be fairly wildly opinionated, but they also tend to be somewhat contrarian, right? Mm-hmm. So really, to me, I'm kind of a fan of brushing it off, in the sense that a VC may be like, what you guys really need to do is SaaS, right? And then like the next VC may be like, and then if you pivot, you're like, okay, we're SaaS. Then the next VC may be like, SaaS is dead. Like, why are you pitching this as SaaS? You're obviously not SaaS. Why are you pitching it as SaaS, right? It's like, oh, the last guy said we should pitch as SaaS, right? So like, maybe stick to your guns, right? Because in a sense, like, it's the VC's job to be contrarian and to really hold a thesis that is unique, right? So, in a sense, their feedback may not be scalable. Now, obviously, if there's something systematic that you're doing that's just culturally inappropriate, then that's generally good to listen to that class of feedback. Like, for example, there's differences between European pitch decks and US Silicon Valley style pitch decks, right? In Europe, basically, your team slide has to have at least 30 people on it. And or else the VCs will be like, wow, you're too small and you're not a serious company, right? Whereas if you showed a Silicon Valley VC a slide that looked like that, they would just basically be like, your burn rate is astronomical, like your thing makes no sense at all. Like, like I'd like to see a deck, or we're obviously too late to invest in this because you're already a large company, right? And, oftentimes a European investor, a European entrepreneur will say something like, oh, none of these people are being paid, right? So it's just this very weird dynamic, right? Where it's, so in terms of getting advice around things about cultural appropriateness, like that's very useful. Like it's useful, like, the learning things like the different styles of pitch that come from different regions, and what different investors look for.
As an entrepreneur, if you do end up brushing off the feedback that a VC gives you, would it make sense to continue trying to appeal to that VC or just move on and find other investors?
I think this, right, which is that the thing that is always eye-opening is traction. Like, traction is always eye-opening, and traction is always something that deserves attention. There may be VCs that will sleep on traction, right? But I think those are probably not that great, because the thing that's really interesting about traction is that's kind of evidence of, if not product market fit, at least it's evidence of some behavior, right? And so as soon as you have a behavior, you go back to this kind of behavioral psychology construct, which is, why are they doing that? And to me, like, at a minimum, if you're talking to a startup that has any traction at all, like, as an investor, you're going to learn something, right? And even if the person running the startup who has the traction actually doesn't understand what they have, right? You're still going to learn about the market itself, right? And you may have a different hypothesis as to why the users are exhibiting the behavior, and you may have a different understanding of what the behavior means, than the entrepreneur. But at least the traction itself is real, right? Like, somebody somewhere participated in something, or they bought something, or they signed on to something, or so this kind of like reality is super important. I mean, obviously, like, this is another class of cultural advice, which is, when you talk about traction, you should never talk about fundraising as traction. So if someone says, oh, what's your traction? You should never say something like, oh, like, we raised this much money. Like that really shows a bad focus, right? It means, to me, traction really only means the evidence of product market fit, and whether you have any users, any revenue, any customers, like, that's what traction is.
So at a time like this, entrepreneurship may seem very promising and very opportunistic, especially with trends of AI and Web3, but sometimes that also leads to oversaturation. So many founders may be watching this with an idea and with a sense of hope and opportunity. As an investor, what advice do you have to give them?
Well, I actually think it's a tremendously exciting time to do entrepreneurship. I think the biggest advice that I would have to give is more on the meta, which is really that you should do two things, right? Which is you should have some very contrarian belief, right? But you should test that belief every day, right? So you should, because to me, if you keep testing your belief, right, then it gets stronger, right? So to me, like, I really want people who are both have deep conviction in their idea and also have kind of like the desire to test it and manifest it, right? Instead of just staying comfortable and being like, I have some fantastic theory, right? So, it's really a desire to see that theory proven, right? And to really actively be, and in a sense, like, there's a bit of the reason why it takes a lot of courage is that you can have this incredibly wild and contrarian belief, but if you take action towards it, you could actually disprove it, right? So in a sense, like, taking the action is scary because, you're like, no, I really believe this. And it's like, if you really believed it, you would want to test it, right? Like, start disproving it, right? Because to me, that's where the rubber really meets the road, right? So to me, that combination is really something that's super important. So for me, the substrate that I'm really looking for is like conviction, right? Because the thing that's amazing is that, VCs, like, if you look at the temperament of VCs, like VCs are almost all uniformly intuitive. And part of what VCs are tuned to detect is conviction, right? So, if an entrepreneur has conviction, it's infectious and it's transferable, right? And in a way, like, I will entertain a conversation with an entrepreneur that I feel has conviction, even if I don't have the conviction.
Do you think that you personally built that value of, I'm looking for conviction in entrepreneurs because you went through the whole Evercoin startup process and you yourself had that conviction to follow through and
Yeah. I mean, to me, like, part of it is being a long time student of entrepreneurship, not just my own personal experiences as an entrepreneur, but, just really studying the field, looking at, some of the top entrepreneurs, trying to understand sort of what drives the behavior of entrepreneurs and entrepreneurship, and really understanding kind of how Darwinian the whole process is, right? So in a sense, like, to me, like, there are certain baseline constructs, and I think conviction is really the most powerful currency, right? Because, for example, if you make a token or if you make equity, right, you're essentially printing your own money, right? And so the question becomes, how do you generate belief in the value of this money that you just printed out of thin air, right? And that the entrepreneur who is the founder has to be the first believer. Like, they have to be and in a sense, like, you can smell that, right? Like, you can really smell it. Like, for example, we have entrepreneurs in this market that are coming in to raise giant rounds, and they're raising giant seed rounds. Like, I'm gonna raise 15 million, right? That's low conviction, right? It's super low conviction because it's like, you haven't delivered anything. You want to get a huge pile of cash at your current valuation. Now, obviously, like, if you're raising 15 million in your first round, you're going to be asking for 100 million valuation, right? And so the attitude is kind of like, well, it's a high valuation and a big raise, so it works because I'm not taking that much dilution. But the reality is it means that you don't believe that you can increase that value, right? So in other words, you're just saying, my equity is just a way for me to get some of your money. And I value your money more than I value my equity, right? So to me, like, we really want to see more discipline, right? Because it's a tell, right? Like, if you raise a smaller round, you're betting on yourself. Because what you're betting on is, let's say you come in, you want to raise 3, right? What you're saying is, with 3, I can deliver so much enterprise value that I can raise around at 5x of that early valuation. So why wouldn't you do that, right? So in a sense, it's belief in yourself, not only in your conviction, but also in your execution ability, right? So to me, if someone comes in and says, I want to raise a gigantic round, like, in general, I suspect that it's low conviction. I suspect that they like money more than they like their chances.
So on top of conviction, what are some other green flags that you see in founders?
Yeah, so really part of what I look for is, in a sense, one of the things we're doing is we're interviewing CEOs, right? So it's really, in part, there's sort of a job interview aspect to it. One of the things that's really interesting about kind of the job interview is that we really want to see problem solvers and we want to see evidence of problem solving. So part of the easiest interview question in the world is really just looking at their career history and saying, what problem did you solve at this place? Like, you were at this place, what problem did you solve? Now, a couple of things that's notable is in the Web 2 era, if you look at the research from Data Collective, there's a book called Super Founders. So in the Web 2 era, you actually can see that there is a typically 4 to 7 year window for the creation of a unicorn scale outcome, right? And that makes sense because typically when you look at the Silicon Valley pattern of 4-year vesting, 1-year cliff, right? Then when you get to year 7, you're kind of almost 3/4 of the way through your second vesting cycle. So the thing that happens is that your recruiting power actually is declining, right? So if you haven't made it by year 7, you probably won't make it. Like your odds start going off a cliff, right? So when you really look at the typical course, and obviously when you look at venture capital is designed to mirror that, right? Which is obviously the funds tend to be like 10-year cycle, and then they're raised overlapping, right? In like 4-year cycle, or this kind of general pattern, right? So to me, the thing, because then you can start to see the earlier outcomes from the previous fund. If you have 4-year fundraising, 10-year fund life cycles, right? So I guess what I'm trying to express here is that if you look at founder history, one of the things that's interesting becomes the durability of their experiences. So if you read a founder LinkedIn, one of the things that's interesting to look at is, so in Web3, one of the unfortunate and not uncommon things is to see lots of short stints. So you see like 1 year, 1 year, 1 year, 1 year. And like, obviously like entrepreneurship is sort of something that often strikes out of a blue sky like lightning, right? So like, I'm not saying that such a person can't do it, but in some ways, one of the things that's very important to try to understand is if an individual has the durability to do something for between 4 to 7 years. Now, sometimes a person will have done the same thing for like 13 years. Often, if you see that, it doesn't feel that good either, right? It feels like maybe they're staying longer than they need to, right? So, that's more of like, like the Reid Hoffman tour of duty construct that he promoted with, so to me, this tour of duty typically is around 4 years, 4 to 7. The thing we look for are things like promotion. So if someone's been promoted in a place, then it means there's evidence that they were good at what they were doing. And then the other thing that's really interesting are just these direct questions, right? So one direct question is kind of like, what problem did you solve, right? You can actually listen for the answer. Sometimes people will say, we did this and we did this, right? That's bad already, right? It's bad if they're saying, what problem did you solve? And the answer with, we solved this. That's not great, but that's not disqualifying. The thing that's more disqualifying is the next follow-up question, which is, how did you solve it, right? And so to me, what happens in that scenario that's super interesting and this is from the Elon Musk playbook, which is that it turns out when someone's engaged in deceit, they want to decrease their attack surface. So what they do is they say less, right? That's what happens because they know that if they say too much, you'll find them out, right? So what's really interesting is if you ask someone how they solved a problem, right? There's 2 reasons why they'll give short answers. One of them is that they're deceitful, right? The other one is they don't even know. Like they don't even know how they solved the problem because they didn't solve it, right? That's an issue, right? So to me, and when you say what problem did you solve, like it doesn't have to be engineering, right? They could have solved an organizational problem. They could have solved an HR problem. They could have solved a marketing problem, right? So like, it's not restricted to a domain, right? Like people have to solve problems. That's entrepreneurship. Entrepreneurship is just problem after problem after problem after problem, right? So like, you have to solve problems.
What was your process developing Gumi and building your reputation as a VC?
Yeah, I think it's simple in regards to VCs are logically only measured through hits, right? So in a sense, like if you have hits, as we did develop in Fund One, right, then we kind of gain reputation as a result. So in a sense, like I feel like that's the only real measure of a VC. So, if you're super early into like a 1inch or something like an OpenSea or something like a Yield Guild or these types of like very, 500, 1,000 plus X types of outcomes, right? Then it becomes the real basis for people to trust your judgment. And I don't think there's many other tricks to it. I do think that there are definitely like nice things that you can do, around sort of marketing and distributing your brand. But I really think at the end of the day, like, it all comes back to hits and performance. That's the VC life's blood.
And in order to get those hits, if you're just starting out as a VC, how are you approaching the entrepreneurs? Are they coming to you because there's so little?
Yeah. So if you're starting out, then you have to be very active and you have to go, because obviously, like when you reach the peak of reputation, then you basically get this kind of halo effect of your brand, right? So if you're an E16Z or a Sequoia, then like deal flow comes to you. You can basically be fairly passive because you basically see everything as a function of your brand, right? So that's sort of the apex predator situation, right? You're the eagle flying above all the other birds, right? So that's really ideal. But, I think it's super important for people to understand kind of where they are. Because I think in the world of VC, there's deeper and deeper pockets of capital, right? So there's sort of single family office, multifamily office, corporate, and then you start to get into the deeper pockets, right? So the deeper pockets are like insurance companies, pension, university, endowment, obviously sovereign wealth, right? So these are all deeper and deeper and deeper pockets, right? The thing, if you look at venture from those kinds of pockets, right, effectively so someone with no track record is just invisible, right? Someone with hits in Fund One is effectively a suspected dart throwing monkey, right? So anyone can generate hits if they're just super lucky, which often happens, right? Where you time a market and things go really well, right? You need to generate hits in Fund One and hits in Fund Two, at which point you become what's called an emerging manager, right? So you don't become emerging, and here's the thing: is that takes at least 8 years, right? So you're 10 years in before you're an emerging manager, right? So I think it's very important for people to understand kind of where they are in the journey, because it definitely takes time to really build a legit reputation in the industry. And obviously the thing that's crazy about Web3 is that Web3 is a very tumultuous industry, and there's a lot of people taking kind of unnecessary risks in terms of their own reputation. And it feels like, reputations can take many years to build, and they can take like one instant to destroy, right? So I feel like there are definitely some firms that are playing a little too fast and loose. And I think that, it's important from the perspective of the industry, that you kind of pay attention to those aspects, right? So you have to play fair, and, you have to maintain ethical policies, disclosure, handling of startup confidential information, treatment of entrepreneurs, and like, there's definitely weird misunderstandings and annoyances, so you just have to try to continue to do your best, right? Because it's ultimately a reputational business.
And did you run into any big glaring challenges along the way of developing your VC?
I mean, to me, like, it's the biggest, ultimately VC is like a game of 3 parts in the life cycle, right? It's basically sourcing, screening, and supporting, right? So those are the three big segments. Now, to me, like the type of VCs that we are, like we definitely want to be supportive. I think all three of the partners at Gumi Cryptos Capital have founded companies themselves, raised VC, have done exits. We've all done at least M&A. My partner did an IPO and an IEO also. And so like, it's definitely been kind of a journey for ourselves, right? So I think as builder-centric investors, we definitely do focus a lot on portfolio support. But at the same time, I think sourcing is always a challenge. Right? Sourcing, one of the things that we've been doing is we're one of the smaller funds and we want to stay that way. We have a philosophical adherence to maintaining something of a boutique atmosphere. So, as far as professionals, we have 5 main people that manage the fund. So it's still a small fund. We went from 4 people managing a $21 million fund 1 to 5 people managing a $110 million fund 2. So it's a big jump in capital, small jump in team size, right? But I think one of the things that we're committed to that's helping us a lot is actually that we're moving more into automation and the use of AI technology ourselves as a way of getting an information advantage. So I think we're definitely going to try to stay, fairly lean. But I think one of the challenges that arises with that configuration is sourcing, right? So if you have like a huge team and they're all out pounding the pavement, you can definitely get wind of more deals, right? So I think for us, we really want to lean into more of a high throughput screening methodology, using heuristics and really trying to understand, and this gets harder and harder to do in early stage because, really entrepreneurs are pattern breaking and, VCs are pattern matching. So it feels like a mismatch, right? But obviously for us, the total volume of inbound that 5, professionals can absorb is somewhat limited. So, I think if we're going to compete, we really have to innovate there.
Well, thanks again, Miko. It's been a pleasure speaking with you.
Yeah, thank you so much.